Nilesh, hi, point taken. But before we get further, Nimesh has walked over to the big ball and there has been a big churn in GQG Partners India Fund. For more details on this, Nimesh?
Well, there has been a lot of chatter about what is GQG doing in India, and there has been a lot of rumors as well. So I thought, let me put a nice, data as to what GQG has been doing in the Indian markets. We all know that, Rajiv Jain has committed to nearly $2 billion to the Adani Group, but that happened in the March. But before that, just look at what have they done in the India portfolio. I was just comparing the emerging market fund of GQG. Now, if you look at the emerging market fund of GQG, their total India exposure has fallen from all the way of as high as 34% in December to 25% in February. So in December, between December and Feb, they have sold a lot of stocks. So what they have done to the individual names, in ITC, they were owning 6.5% of the total fund. That is the total fund of ITC was the highest weight. That in February seems to be largely out of the top 10. So they've largely sold a lot of ITC in those 2-3 months. Even Reliance, they were holding 4.2% of the total fund. That seems to be out in the Feb data. Similarly, if you look at SBI, they were owning 2.8% of the fund, and then in Feb, it actually looked like they've cleaned out in SBI as well. However, they've added some stocks, which includes HDFC Limited, where they were owning 5.1%. That holding has gone up to 5.7%. And in ICICI Bank, they've raised the stake from 2.9% of their fund to 3.7%. That's basically the total exposure that the EM fund had within the GQG holdings. If you look at the GQG Global Fund, even they have exposure to the Global Fund. In the Global Fund, they've made a small change. The holding in HDFC Bank was 5% in December. That has now fallen to 5.1% to 5% in February. The total India exposure has slightly moved up from 7.1 in December to 7.3. This is all before they invested money in the Adani Group. Now look at GQG's top India holdings, and that will give a good picture. The biggest holding is ITC. They own 1.3% of the total company as of December 2022. As I said, they've sold some stake in ITC in the last couple of months. Cipla was the second big holding, 1.2%. HDFC Limited, Tata Steel, Sun Pharma, 0.7 to 0.9%. And the list goes on. JSW Steel, they own NTPC, Coal India, ICICI Bank, Bharti Airtel. These are the few big names that they own. Now, what have they done in terms of exits? They've sold Reliance, they've sold SBI, and they've sold ITC. Among the three names, Reliance has been a big underperformer since January. That stock is down 13%. Even SBI is down 17.5% since the December. Only one stock where they've sold and still the stock is up, that is ITC. So that's up 14%. But also I want to add one more line. They've also sold a big chunk of HDFC AMC last week, and they've cleaned out of HDFC AMC as well. So while they've committed good $2 billion to the Adani Group, but on the India portfolio, their holding has come down, and they've sold a lot of big names, which includes ITC, Reliance as well. And I believe in the March filing, there could be more names where they've reduced their holdings, in those names. So that would be interesting to watch. But I guess from a positioning point of view, GQG has definitely lowered down its India holdings across the board, and they've only added to the Adani Group in the month of March.
Nimesh, very interesting compilation over there. Nilesh, wanted to pick on that point about HDFC AMC. The developments which have taken place today have resulted in a knock in the stock prices, down close to about 5%. You like HDFC AMC. Do the developments alter the investment thesis in the AMC companies?
Well, in the very short term, it definitely is negatively impacted. I think this will impact maybe from a few quarters perspective, maybe 3 to 4 quarters. There will be some bit of impact. In addition to that, there's also the overhang that there's an expected change in the total expenses ratio that's already been talked about quite a bit. So I guess that still they will have a bit of a challenging time for a few quarters. But my sense is that I think it makes sense for investors to take that in their stride, because over the very long term, the long-term investment case for an asset management business, for a mutual fund business in India, I think is very solid, very robust. Penetration levels are still extremely low and have a long way to go to catch up even with some of the global emerging markets. So I clearly think that it's hard to come across a business where you can see compounded double-digit growth over a 5 to 10 year period with very high ROEs. I mean, the business is extremely capital efficient. So I think in the short term, I clearly think this is a bit of a negative, but maybe from a 1 to 2 years out perspective and beyond that, I still think this is a wonderful opportunity. You buy great businesses when they're facing the most difficult times. And we've seen this in the past, many great businesses getting impacted due to short-term sentimental reasons or a bit of changes here and there. But in the long term, the business is so solid that they end up being long-term compounders and long-term winners.
Okay, all right. Take that point on board, Nilesh, on those AMC companies, and talking about